All right, so it looks like we have a lot of people here, so we can go ahead and get started. So just to introduce myself, my name is John. I'm the operations manager here at Elite, and I have the pleasure of having with me today Dr. David Berger. He is our guest speaker for today. He's also one of our superstar instructors. He graduated from University of Chicago with a bachelor's in math and science, and then he earned his PhD from Berkeley in economics. So very knowledgeable, a lot of experience, especially with mentoring students as they go through the high school and college process, applying to undergraduate and even graduate schools, especially for business. So very excited to hear what he has to share. Obviously, you know, the topic for today is what to know before studying money. And so he's going to be sharing from a lot of his own experiences and what he wished he knew as a student before going into college and while he was navigating the college process. So we're very excited to learn what he has to share. But before we start, I just wanted to get a little pulse of the room and see where everyone's coming from. So if you guys could go ahead and take a look at menti.com. So what you're going to do is either on your phone or opening a new browser, go to menti.com, and you can go ahead and see, see the questions that we have to ask. So once you're on this page, if you can please go ahead and hit that heart button in the bottom right. Yep, some of you guys have found it already. That's great. That lets me know that you guys are there and ready to answer some of these questions. So we have a good number of people here. So I'm going to wait until we get that to about 50, which is about half of the people who are here. And then I'll know that most of you guys are ready to get started. Awesome. All right, perfect. So we're getting there. So let's get to our first question, which is very simply, who is attending today? So are you a parent, a student, or are both of you attending? So we just want to see who's here. So a lot of students, great. Wonderful, okay. And if you guys are just joining us right now, we're just starting off with a few questions to get a pulse of the room. You can head over to menti.com, M-E-N-T-I, and use the code at the top, 5430-431, and participate in this poll. All right, next is, what major are you primarily interested in? Economics, business or finance, accounting, math, statistics, something else? Maybe you want to study biology, chemistry, engineering, physics, English, history, you name it. Let's see what you guys plan to study, and that way we can get a sense for who's here. So a little surprising, Dr. Berger. I didn't expect this many students interested in other majors, but I think that's a great sign, because what you have to share today is not just for econ and business majors, right?
Absolutely. I mean, the person who probably taught me the most when I was an undergraduate about business was majoring in South Asian languages and culture. It was a white dude from the Midwest who just loved, I think Tamil was the language he was most focused on. But yeah, but he came in with a strong background and really provided it. So yeah.
Awesome. Yeah. All right, and then this is the last question, and this is from the student's perspective. So parents, if you're answering this, you answer for yourself. To the best of your knowledge, how much knowledge does your parent have about business, finance, investments, etc.? Okay, so for the most part, it seems like apple doesn't fall far from the tree. So a lot of you guys are here because you probably hear some of this talk at the dinner table, and your parents are, making decisions, and so it might be passed on to you as well. So great, pretty good distribution, but a good number of you have parents who are knowledgeable about this area, and so maybe you're here to learn for yourself as well. So great. That is actually the questions that we had, just so that Dr. Berger can get a sense of who's here, and so he can tailor his presentation to that as well. And so, yeah, without further ado, if you want to take over, Dr. Berger, that'd be great.
Sounds good. Sounds good. Okay, so I got my presentation back. Yeah.
Yes.
Okay, so I say studying money. I'll explain what I mean by that. But first, just a little bit about myself. Played trombone in high school. Now I point that out just to let you know, like, where my story began, which is that my extracurriculars were kind of based on um, uh, demonstrating some level of commitment. Uh, I wasn't super excited about trombone or band or music. I just did a lot of it. Trombone was strategic for me because I could play in 4 ensembles and there was low competition. So I was actually thinking like an economist. But if my school had offered other extracurriculars that I was more interested in, that like actually would have match my interest a little better, I would have done them. Okay, I got my bachelor's in math and economics from the University of Chicago. And this is where I'll sort of point out that the University of Chicago at that time, and as far as I know currently, doesn't have a concentration in business. It's got a great business school, and if you work very, very hard, you can petition to take classes there. But it's something like 20% of students at University of Chicago end up majoring in economics. Very few of them are actually interested in economics. They want to work in business or finance, but the school, won't teach them. So I mean, I was in the Blue Chips Investment Club, which was a large club on campus that taught some of the basic skills that I would like to emphasize in terms of picking a stock and analyzing its value. But the leaders in that club were coming in with their own knowledge. After undergrad, I worked in software development. I worked for a hedge fund, and I worked for a financial news firm. So I was working in finance. I wasn't doing finance. I was doing software. Just worth knowing. And then I went and I got my PhD in economics from UC Berkeley. So I majored in economics. Unlike most people at University of Chicago, I actually was mostly interested in economics. But I had a little bit of that finance club experience. So I talk about money majors, and what I mean is that, like, depending on what school you go to, there are these things that are adjacent in some way to economics, right? And you might go in, pick one, study one. Business, pretty straightforward, but again, it may not be something that you can study directly until you go to, say, get an MBA. Same with finance. You may or may not have that option. Financial engineering is like a master's level program that's incredibly popular these days. Accounting is a little bit more straightforward, a little bit more of a linear path if you want to major in it. Actuarial science is, I think, one of the most underrated options out there. You may or may not have that as an option for majoring. But if you really just love math and don't particularly care about what the application is, actuarial science is in many ways a very practical thing to get into. That's quantifying risk in great detail. Okay. So the information I sort of prepared, not so much a like how-to guide in terms of, how to invest, but really thinking about if you're thinking of, studying one of those majors I just went through, what are like kind of the best ways to do it? In particular, what are some things you would want to get a jump start on? What are some things you would want to look more into, um, to see if you like it or to augment, other skills? So three big skills: high tech finance, and I'll talk about that, but that's really kind of the computer science statistics side of things, academia and research. Now, interestingly, very few of you said you specifically wanted to major in economics, so that might be the least interesting path. That happens to be the one I know the most about. And then the third one, traditional finance, that lines up the most with sort of the title of this webinar, fundamentals of investment, of investing. So we'll talk about that. Um, what you would want to know, what you would want to get sort of a jump start on understanding if you want to kind of go in that direction. And for each path, what I want to do is I want to give a sense of what it is, explain the connection to an economics degree. And again, I say majoring in money, but realistically, I'm thinking that a number of you will end up pushed into studying economics if you're interested in finance, for example, because if you look at the majors offered at prestigious schools, very often you can study economics or nothing, which is kind of surprising. I'll say a little bit more about that. And then I'll try to make what recommendations I can to get a good start on that path. Okay, so let's start with like high tech finance. And I would say, of course, that if you're going that route, data science, which, of course, you can talk about machine learning or artificial intelligence or just plain old data structures. This is something absolutely that's going to connect fabulously well to careers in finance. And in case you're not familiar, what is data science? Broadly, it's the use of data to inform decision making. I mean, it's been a part of what we do, of how business decisions have been made for a really long time. But in more recent times, we really think, kind of in the age of Google, the use of big data, enormous data sets that require, sophisticated algorithms to sort of mine for insights to make accurate predictions. Now, I noticed that since like I think the plurality choice when we asked, well, what are people interested in was other, but I might minor in economics. I'm going to go out on a limb and say that good chance that a number of you might be thinking about computer science or something like that. And if that's the case, then really good to think about how to take your computer science degree in as much the direction of data science as possible, to be like really in demand in that industry. In case you're not super familiar with data science or machine learning, or any of these terms, this is just kind of a nice little map of the types of things that get done with it. Again, in some ways, it's using computers and statistics to spot patterns. And some of those patterns are just descriptive, which is what we see on the top left, that unsupervised learning. So that's like one connection can be like in marketing, we can see that customer segmentation. If we just sort of recognize groups, we might have a computer that sort of, recognizes that when someone goes to Walmart, if they buy a Barbie doll, they're likely to buy a candy bar. Now, humans might sit around a table and say, oh yeah, that probably corresponds to someone with a family, and they've got, a 6-year-old in line with them. Computer has no idea why, but they spot it. Supervised learning will be a little bit more helpful for things like forecasting. If you spot, patterns in the in say assets, this could be, for example, high frequency trading data. If you have like a theory about the when to predict a change in the price of Coca-Cola based on the movement of the price of Coca-Cola in the very short term, you could hone that theory with like a supervised learning algorithm. Again, this is the kind of theory that may or may not require any finance knowledge. It just requires you to understand how to use a computer to spot patterns in data, right? And if that's a direction you want to go in, by all means, there's going to be a big market for those skills. So let me actually, let me get to that. So yeah, a lot of modern finance jobs focus on pattern recognition. Modern finance jobs, I'm thinking of things like high frequency trading, hedge funds, etc. Nearly every finance job uses some kind of data-driven presentation. It might be the difference between mastering a super specific technology, or just being really, really good with Excel. The difference between a modern finance job and one of the traditional finance jobs. But either way, it's going to be very data driven. So if you have sort of data skills, if you are majoring in, say, computer science, and you want to go and you want to load up your classes with as much say machine learning kind of stuff as you can, that's going to be perfect. And then even if you don't want to think of yourself as a computer science type person, just being able to download a data set and apply some basic transformations to it to make like a little infographic or something like that turns out to be very, very valued. So along the way, I'm peppering in strategy tips. If you like the idea of working for a hedge fund, have a small data science portfolio and toolkit. Pick a technology that you can learn. Have a project, work on the project, talk about the project. You can put the project on GitHub or whatever, but like find a way to follow through on some data science project, and it goes a long way to working for something like a hedge fund that does high frequency trading. Okay, so how can you study data science? So this is what I was saying. Pick a technology such as Python, and take some kind of internet tutorial. Really helpful to go into it with some kind of project in mind. Advanced, I say advanced, if you're really interested in this and you've done, whatever your school currently does, and you don't want to wait for college to start, you could pursue a certification. Microsoft certifications and IBM certifications are very clearly spelled out. They have a test. You have to register for the test. There's a fee to register for the test, but there's like a list of skills involved. So you can, for example, decide you want to master Microsoft Azure. I'm not trying to say that that's an easy thing to do. I just know that there are some ambitious students out there. Yeah, so those are the kinds of things you could certainly do if you really feel like an absolute ninja and want to get recognized for it. Also, LEAD, that's kind of the elite prep extracurricular. They have a data science in Python program. It's a great idea. I thought of something similar, but too late, so I don't have anything to do with that one. But it's something that elite prep offers, and I would encourage that if this is a direction that looks attractive to you. Okay, so I said, so for that path, high-tech finance, make sure you learn whatever you can learn about data science, right? Okay. This next skill, causal inference, I'm really thinking about people who want to go in an academic route. Maybe you're interested in economics and you want to potentially study it on an academic level. Maybe that means you want to go to grad school, you want to get a PhD, you want to be a professor. Maybe that means you want to go to grad school and you want to work for a policy group or something like that. And if that's what you're doing, I strongly recommend doing everything you can to learn about causal inference, which is kind of a pretty vague or pretty big, broad umbrella. I tried to make it seem a little bit more. I tried to think of a way to like distill it down to something very specific, very concrete, but it really is a way of thinking. I have a picture of this book, Freakonomics. I'll talk a little bit more about that in a minute. But that's the spoiler, the one book I would read if you wanted to see like, what is he talking about? Am I interested in this? So what is causal inference? So, if you've, been around people having conversations about, current events, politics, public policy, medicine, anything, you eventually hear, the adage correlation does not equal causation. Sure, but what does equal causation? And that is a little bit more difficult. What we mean by causation in general is some kind of evidence that when one change is made, another change will occur. Correlation, of course, is just when one change has been made in the past, another change has occurred, or two changes typically occur together. Doesn't necessarily mean that when that change is made in the future, another change will occur. So we're looking for some way of bridging that gap, saying that when that change is made, another will occur. It's something that is relevant in any sort of quantitative empirical discipline, right? So if you're going into any science, you have to think about causal inference. It turns out that some sciences really give you such a narrow box to work with that you don't have to think super hard because you're only allowed to like think about randomized controlled trials. But yeah, it is something that we think about for any quantitative empirical discipline. And so these economics and business and finance, which are all part of social science, fit in that. the methods can be statistically sophisticated or simple, but they have to have some, process for ruling out competing explanations. Uh, and generally, when economists use statistics that way, we call it econometrics. Um, uh, so back to this book that I was talking about, it's really interesting. They apply, this kind of, I mean, they say economic analysis. I mean, it's really, causal inference analysis to a number of topics that don't seem economic in nature. Like, why did crime go down in the 1990s? A number of, candidate explanations: a prosperous economy, more policing, more prisons, something else. The book includes a pretty provocative hypothesis in there as well, which I won't bring up. But let's talk about the prison one. Like, how would we estimate the impact of prisons? Well, more prisons might be associated with less crime, but more crime is associated with more prisons. So there's a little bit of a difficulty. They end up using a technique called instrumental variables, which kind of tries to find a way to eliminate the problem caused by that second bullet point, caused by that more crime, more prison situation. Focuses on changes in prison population due to overcrowding issues, where lawsuits were brought, and people said, based on civil rights arguments, you had to empty out, you had to release people from prison, you had to decrease your prison population. And so the arguments end up being very careful, and ends up coming up with an estimate, ends up concluding that actually prisons were more successful at reducing crime, were 3 times as successful as typically thought, when people just use a pure correlation. So it's kind of interesting from that perspective. If you're familiar with, say, like medicine, you're thinking about causal inference. I'm thinking about like what's good evidence versus bad evidence. Like in medicine, we might say like the minimum to really believe something is going to be a randomized control trial, some primary study where you take people, you enroll them, before you start observing them, and you test the treatment, you randomize them into groups. That's not the only kind of scientific evidence that exists in the world. And if you look at like epidemiology, for example, they will pick different other kinds of studies. Admittedly, it's lower quality evidence, but it's not useless. And in social science, very often that's all I missed one of the edits. Those observational studies, the green and yellow bars, that's kind of where like the research you do in economics ends up living. So like if you're familiar with causal inference from other disciplines, well, in social science, we kind of end up in the middle there. Okay, so why would you study, if you're interested in money, say, why would you study causal inference? Well, maybe I should say why you wouldn't study it. If you just want sort of a career working for a bank, say, or you just want to like manage your own portfolio or something because you're going to make money doing something else, this is, might not be for you. But if you want a research career, this is the depth you need, right? And if you are studying economics itself and you want to go like and eventually apply to grad school, so you want to write an honors thesis, you end up in kind of a difficult situation because you want to propose a topic, but you spend like the first 2 years just passively receiving stuff with, and it's not really to your third year that they start explaining how they test these theories, how they come up with these theories. So you get like more than halfway through without like really like focusing on that. So my strategy tip is, if this path is for you, and you say you wanted to go to grad school, like begin thinking about research topics year one. Figure out like what is a kind of phenomenon I would like to prove. How would I go about proving it? Ask a lot of stupid questions. Oops, sorry. If you're not sure, check out the book Freakonomics. I'd argue about everything. Be willing to look a little dumb getting started. Finding out that some of the things that you think prove something don't really prove something can be kind of informative. There are blogs that you can check out: Freakonomics, EconLib, Marginal Revolution. Certainly, when you're in school, if you take a class in econometrics, generally speaking, if you have the right math or math and statistics background, you can, even if you don't, even if you're not majoring in economics, it can be actually pretty informative. But if you like the idea of like thinking about hypotheses and testing these phenomena, especially like in sort of an econ sort of way, Elite Prep's lead research proposal program gives this opportunity. That's a general program for like students who think they might want to get an early start thinking about research. I am involved with that, and you get a chance. It's not specific to any one discipline, but we give you a lot of feedback on what goes into a research project. Okay, and then this sort of last path, the financial fundamentals. So all these like different like words that you might have come across, not really sure. You might not be really sure like how they all fit together. So what do I mean by financial fundamentals? So they're techniques used to evaluate, describe, and communicate the value of a firm. And I say firm, I probably should actually say an asset. When we think about, asset, we think about something that you own that has value. If you're a really abstract person, you can always wonder, why does money have value? But we're generally going to think of something that you own that someone will pay you money for, or that continually, puts money in your pocket. Fundamental emphasizes some kind of rational basis for an asset's price. And we have to say that to contrast that with techniques that are pure pattern recognition. So there are like a number of people who trade, who do trading strategies. And I don't know if any of you have gotten into like day trading on Robinhood or something like that. I've heard, a number of students who do. A number of the things that you'll read, if you look at tips for like how to trade, they'll be based on what's called technical analysis. That is, don't bother trying to understand what a company is or does or whatever. Just look for a pattern in the graph. Okay, but fundamental means like actually looking at the numbers behind what the firm is doing, the numbers behind its operations, behind its balance sheet, etc. That could give some kind of rational basis for an asset's price. These are going to be things like income, overhead, margins, profitability, cost of capital. and discounted cash flows, which turns out to be super important. Now, a lot of these things, like on their own, probably, not too hard to explain individually. Income, you can probably guess what a firm's income is. Overhead, not super hard either. Once you've heard it a few times, just refers to fixed costs, right? Margins, again, kind of know it or don't, but if it sounds like the margins you draw on your paper when you learn to write cursive, it's exactly what it is. It's the difference between the revenue you're getting and what it costs to produce what you're selling. Yeah, profitability is going to be similar. Cost of capital refers to, in some broad sense, interest rates, what it costs a firm to borrow money in order to produce things. And then discounted cash flows is kind of the one that involves a little bit of explanation. We're thinking of cash flows as being almost, but not quite the same thing as income, and discount has to do with a concept called the time value of money, that in some way we care about we care about $1 today more than $1 tomorrow. Okay, so that's just kind of like, a preview of like a bit of the vocabulary that becomes important. But I should probably point out, if you're wondering, like, why should a money major study financial fundamentals? And I almost now I wish I should say, why should a non-money major study financial fundamentals, since so many of you are really interested in other things. So there's kind of a path. Like, a number of you have kind of, breathed a sigh of relief if you've, submitted by now a number of college applications. I know you might have some more to submit, but you might have written your Common App essays anyway, and your UC essays and so forth. And so you might feel like, the worst is behind you. So you gotta, you think about, like, what is the next process going to be like? And if you wanted a job in finance, the idea is, of course, you want good grades, you want to be at a prestigious school, and you want financial knowledge. And if you do that, you can get an internship. And if you get an internship, you can get a job, right? That's the thought. And there's a wrinkle, which is that, as I said at the beginning, that prestigious schools either don't offer basic business finance, or they make it difficult to fit early enough, to fit it in early enough to get an internship as soon as possible. So yeah, if you look at like the most selective schools, very few of them specifically offer a finance major. In some cases, there will be a finance or business major that's offered through the business school. But then it's kind of a catch-22, because in those cases, in general, you have to make an additional application to be accepted into the business program. Yeah. Yeah, I'm getting a question I think is pretty worthwhile. Can I explain the difference between finance and econ, or business admin as majors? Yeah, the economics is really going to be, in some ways, more about the study of incentives than specifically the study of business. So studying business kind of falls under economics, but honestly, there's a lot that we study when we study economics that is just about incentives. you know, it's going to be a lot more abstract in a number of ways. It focuses a lot on, you know, what we talk about as like equilibrium conditions, as in what we can say, you know, how the world is ultimately going to work out no matter what like business or industry we're in. But it's very, very little about what you should do in a specific case or situation. A lot of it has to do with differences in method. So like business administration is very focused on cases. Whatever class it is you're studying, they might give you like a couple of topics, a couple of pointers, but the way you apply them is by going into detailed case studies, which is kind of interesting because the detailed case studies end up involving documents, exhibits about this company that just have like a bunch of numbers for their financial fundamentals. So there might be problems you're supposed to solve that maybe have a common sense solution, but your task in solving them will very often require you to support them using some of the tables, the financial fundamentals that you're given. It's not unlike answering a document-based question in say some of the AP curriculum. Okay. So in terms of which is more rigorous, it kind of depends on what you mean. Economics is known for having rigor for the sake of rigor. So everything is very careful, very organized, very mathy. Finance majors will often get into some actually, in some ways, more complicated math, but they'll just be much more tightly focused on finance. So it kind of depends on what you mean by rigor. Economics is kind of this strange blend of mathematical and philosophical rigor, if that makes any sense. And if you really want to know more about what I'm talking about, if you pick up the book for economics, that'll give you a good idea of a number of the things that economists can study that don't necessarily seem to have anything to do with money, because economics is really the study of incentives, and we think about incentives in a very rigorous way. Okay, so that's kind of a good preamble. If you go to an elite, if you go to a top tier school, there's a really good chance that the big major there will be economics, and that the faculty in that major are going to be most concerned with getting top students into top economics graduate schools. And like, you know, yeah, it's nice if they can get other students hired by banks and hedge funds and investment banks and consulting firms and things like that. And the school overall cares about that. But the professors you're working with are kind of like, I don't know, that's not my world. That's why, like, going in pursuing some kind of financial knowledge, especially if you're going to a prestigious school, can really help, because those financial internships will recruit from your school, but then they'll just ask you, you know, like, how long have you been interested in finance? What do you know? And if you only know like general economics, you're less competitive in that respect. Let me take, you know, a slight pause to give a little bit of a contrast here between like some of the things that I would recommend knowing if you wanted to invest your own money, versus if you wanted a career in investing. They're actually slightly different. So an individual investor, they save for some particular goal. For most people, that goal is retirement, right? And you emphasize risk, but you emphasize it relative to that goal, right? So you want to have, the biggest nest egg for retirement. But if retirement is 40 years away, then and an asset is investment in the next 10 years, but overall that'll all like kind of balance out over the next 40 years, you don't really care, right? On the other hand, if retirement is 2 years away and an asset, has a pretty low return, not a great buy, but it's really safe in the next 2 years, well, then for that goal, that might be a good asset, right? And the one thing I would scream from the rooftops is that if you're an individual investor, probably all you should care about are asset classes. If it's fun for you to pick stocks individually, and try to guess a winner, that's fine. It's fun for some people to look at horses before a race to see which one is going to win. But as an amateur or as a moonlighter, as a part-time enthusiast, it's not necessarily worth your time. And there's a good amount of research on that. So you focus on asset classes, maybe, stocks or bonds, or maybe a sector within stocks, or maybe some kind of hedge. There's some broad categories that you should look at, but that's, probably the best recommendation as an individual investor is, be diversified and focus on the asset classes that get you to your goal, right? And if you go for professional advice as an individual investor, that's what your advisor will tell you. If you want to be a financial analyst, then, or someone working professionally in that, then what you're really doing is you're make recommendations within some kind of strategic constraint. So you work for a fund. The fund wants to maximize its growth, but it can't exceed a certain threshold of volatility. That's a measure of risk, or something like that. So you need to be like very quantitatively careful about what your recommendations are, so that you understand those strategic constraints. Also, you provide due diligence on an asset's potential growth and potential risk. And that means, like, honestly, not drinking the Kool-Aid, right? So a good example is that I think it was Merrill Lynch. As recently as last year, there was like an enormous spike on Bitcoin, right? And there was a point where, like, the president of a pretty big investment bank, and I forget which one, like, basically sent out a company-wide memo saying, stop coming up to me and proposing that we buy Bitcoin. We just can't do it. Why? Well, because the growth in that was not something that could be easily explained and analyzed. Like, we could have a conversation about it. You and I could talk about why Bitcoin is really interesting, really cool. I could make, an armchair recommendation about, whether or not you should put your own money into it. I don't know. But, for an institution that needs to show, like, show the soundness of their investments and needs to say, where is the growth coming from? There's just no way that they can expand into that category, right? Of course, that said, there are funds that now specialize in those kinds of assets. So, Okay, and you need to quantify projections, that is projections forecasts with realistic assumptions. So you need some kind of understanding of how your assumptions go into how the assumptions that you put into your model create the projection that you get out. Yeah. That might look something like this. A model that you do might look something like this. This is what's called a discounted cash flow model. Remember I said discounted has something to do with time value of money. Cash flow is going to be something that kind of comes from income, but it's going to be adjusted a little bit from that. What's kind of neat is that this is all produced by like an Excel file that you could, that anyone could kind of download and play with. And if you look in the top left, basically is where we sort of, input a number of assumptions. Some of these are, obvious what they mean. The tax rate, that's the rate at which the company's profits will be taxed. The discount rate relates to this time value of money concept. It has to do with the interest rates in the economy, and it's how much we discount future cash flows by relative to today. So if we say a discount rate of 12%, what do we mean? We mean that a dollar today is worth $1.12 tomorrow, so we divide, or a dollar today is worth $1.12 next year. So we would divide everything from next year by 1.12. There are a couple of other things that kind of go into this model, including like what the price is of a share in this company, and how many total shares there are, the amount of debt. But the big thing is thinking about what the income is going to be for the next couple of years, which is what we have in the middle. The things in blue are sort of variables that the analyst investigates, researches, and comes up with a proposed value for. EBIT stands for earnings before interest and taxes, which is a way of saying that interest and taxes are important, but I'd like to start with earnings before I apply that. Earnings will just be the net income, again, before I worry about income and taxes. And then I apply a tax rate. I add back in depreciation and amortization. This is an accounting thing that is subtle, it's technical, it feels kind of dumb when you learn about it, but basically there's this artificial thing that we do to space out large purchases over several years, called depreciation and amortization. And if we really care about when money is spent and when it's paid for, it has to be, we have to undo it. So that's something that goes into this model. Okay. Are the slides stuck for anyone else? I'm seeing for someone's got slides stuck. Are they stuck for everyone?
We're seeing the DCF model right now.
Okay.
Yeah.
Okay. So it's possible that that's just an isolated problem. Okay. I apologize if that's an isolated problem, because if people are seeing the DCF model, that is what I want to see, and I do apologize if anyone's seeing something different. Okay. Yeah. Yeah. Okay. Anyway, this is just me talking about like how you could use these fundamentals to fill in a projection like this if you were working in this industry. Okay. Maybe you find that kind of thing boring. That's okay. It's the kind of thing where you don't have to be super enthusiastic about it. Depending on where you specialize, it could just be something where you pay your dues and move on. It's not all about math. So I put something with a pretty little graph here. This is SWOT analysis. It's a way of analyzing a company's strengths, weaknesses, opportunities, and threats. Or literally, it's a way of organizing the information you read about that. This is Porter's 5 forces, something that gets taught in business school quite a bit. It's a way of checking out an industry, giving you a sense of whether an industry is like really attractive or whether an industry is just like nightmarishly competitive. Okay. In any event, so I said, tell you how you can study these things. And yeah, in some cases, there can be real gaps in the like formal offerings if you're just starting the undergraduate level. My first recommendation is watch Shark Tank. It's okay if you're laughing at me right now. It's an oddball recommendation, but so many people watch that show and they just pay attention to the products, pay attention to the deals. The deals are really, really interesting. You can look up those terms, or I think the third bullet point, look up the terms that they use. You know, Shark Tank does not use complicated financial terms, but they're relevant. The difference between equity and debt, look that up. Look up what a royalty is. That will also come up. You know, if you're really interested. My wife's in business school right now. She was never particularly interested in business. She's getting a JD. She's getting an MBA now. The number of examples she brings up from Shark Tank in her class is staggering. And everybody's like, actually, I didn't understand what the professor was talking about. He brought up something from Shark Tank and it actually helped quite a bit. There are some podcasts too that you can get into. But honestly, anything you do to show an interest, a real interest in business, in particular in business problems of finance, will help, because especially if you go to a prestigious school, there are going to be companies that recruit, and they're going to be a little bit open-minded about your background, about your major, because a lot of the people they're interviewing at that school don't have the finance major. There might not be a finance major, but they're going to ask, so why are you interested in this position? If you do anything to show and maintain an interest over time in this kind of position, you can absolutely get that. And then, of course, fundamentals of investing. I go into some details about some of these things. This is from my syllabus. This is kind of like the breakdown of weeks. I have those. First, the industry analysis, the company analysis, and then some things I explain about how to do the DCF, how to think about interest rates, and how to finish off a more advanced DCF, and how to talk about ratios as well. So that's kind of my this is a way that if you would like to get started in making this an interest, a hobby, a habit, whatever it is, because you want to go in this direction, these are the kinds of things we would cover. Yeah. All right. So with that said, let's talk about just summarize some of the things I've said about what next. Decide what route. I said your student. I guess I was thinking about parents being in the room, but I've got a lot of students in the room. So what route you want to take? emphasize academics. I don't want to short sell that. I don't, you know, there's always situations where you can come back from, you know, a negative academic experience. But there's a lot of situations where outstanding academics can make up for, you know, not being super well prepared for a specific thing. So whatever path, emphasize academics. And develop a data research project, like high frequency trading, hedge funds, quantitative analytics, if you want to go into the high tech finance route. And check out the lead data science in Python if that's something that you're interested in. Read research summaries, so books like Freakonomics. If you're going in the graduate school or Federal Reserve or policy research, this is the more like academics or sort of research route. And the lead research proposal program is good for that. Of course, if you're going in the more traditional finance route, watch Shark Tank, listen to the Investors podcast, scan Investopedia, and by all means, check out Lead Fundamentals of Investing. Yeah. And I'll turn that back over to John. That's all I have to say. Thank you.
Awesome. Thank you so much, David. I'll be honest, as I was watching you go through some of that, I was like, wow, where was this program when I was in high school? Because this is a lot of things that I never really learned how to do, but it's great that students will be able to learn these things, because for any of you guys thinking seriously about either majoring in economics, finance, business, pursuing a career in that field, or like David mentioned, doing individual investing, these are things that skills that you will want to have and will give you a leg up, especially when you're in college, you're trying to go for those competitive internships. Most freshmen, when they step foot on campus, they have nothing that they could put on their resume that'll tell a company, hey, I'm someone that you should invest in. I'm someone that can help you and contribute. But having these skills in your back pocket, you're going to blow away your interviewers, because you have skills that college graduates don't have. And so that's something that we really tried to put together with this program. So on that note, just wanted to ask a couple quick questions for you guys. So what's interesting about this program is we are actually halfway full. So there aren't that many seats left in this program. So if you do want to pre-register, save a seat in this program, which is going to start not next week, but the week after, so on December 21st, please go ahead and indicate so in this poll, which we'll be able to look up by your registration information. So let us know if that's something that you are interested in, so that we can make sure that we contact you appropriately. And just to give you some more background about LEAD, so we created LEAD because we realized, and this is something that's been happening in higher education and college admissions, colleges are looking very closely at students' extracurriculars and how they exhibit and demonstrate their passions in very tangible ways, because so many students say they want to go into business, they want to go into engineering, but what proof is there from the students' activities that will to corroborate that? And so that's why we created LEAD, because we wanted students to have something tangible to show, and all of our programs have something tangible in terms of deliverables. So for this program, we're actually, David's going to be teaching you all these skills, but the deliverable is a stock pitch competition. So you're going to be picking a company, analyzing it, performing that discounted cash flow modeling and all that in order to present in a very Shark Tank kind of way to a panel of judges. And there's going to be winners, awards, and we're actually partnering with the Center for Future Global Leaders, which is a leading service and leadership organization, to give certificates of achievement for students to put on their college apps as well. So a lot of really great things to come out of this program. So yeah, that's something that we wanted to make available to you guys. And then the next question is, which other programs are you interested in learning more about? Because we have, like David mentioned, data science in Python, our research proposal program. We have a photography portfolio program, a screenwriting program. a program called Intellectual Colloquium, which is where students get together and discuss philosophical issues and read high-level articles and short stories so that they can have those conversations. There's web app development, math competition club, and so on and so forth. So go ahead and let us know which ones you are interested in, and you can choose more than one. And on that note, we do have another webinar next Saturday to just go more in depth in terms of like, how can students pursue extracurriculars in a meaningful way during the pandemic? So many students are saying that they can't really do extracurriculars right now, at least in a meaningful way, because they're not able to see each other at school. So just to give you a little idea of like what people are going through, this is a survey that we put up in the middle of the summer when I did a webinar on extracurriculars. And of the 521 students that participated in this webinar and poll, this is the number of hours that they spent on their extracurriculars on a week-to-week basis. So, pretty understandable distribution. This is before COVID, but after COVID-19 and after the pandemic, those hours were drastically cut, where you see the vast majority of students are just spending very little time meaningfully in their extracurriculars. So that's why we created these lead programs, so that students can have a way to do something tangible, show colleges, hey, I'm really serious about what it is I want to study or what my passions are. Here is something that I can show you, and even better, write about in my college applications. So this is something that we feel is going to be a huge advantage for students to be able to show colleges proof of concept, proof of their interest and passion. And that's something that we are really excited about bringing for everyone here. Having said that, that I believe is it for today. Thank you everyone for coming and for participating in this webinar. It's going to be recorded, and we'll be sure to share it with you guys once that's available. And if you are interested in signing up, please contact your local Elite Prep branch immediately, because as we said, even before today's webinar, this program's already half full. So we want to make sure that we can get the most interested students enrolled as soon as possible. All right, and just whatever time we have left, if there are any questions, go ahead and submit them in the Q&A. Oh, so the program tuition is $700, and that's going to be starting again December 21st until December 31st from 3:30 to 6:30 p.m. And we have more information about that on our website, but that's when the program is going to be. If you have other questions, yeah, go ahead and put them up in the Q&A. In the meantime, I'll go ahead and share the screen so that you guys can see the program details. It's going to be December 21st through 31st, Monday to Thursday, from 3:30 to 6:30 p.m. And again, students will be participating in a stock pitch competition so that you can actually study a company, break it down, analyze it, and pitch it to a panel of judges, which is really exciting. The grades, Dr. Berger designed this class with sophomores through seniors in mind. And again, yeah, this program is not just for people who are looking to apply to college, but seniors. If you're going to be going to college next year and you want a tangible skill to be able to show and go into college with, then this program's for you as well. If you're younger than 10th grade, we have to make sure that you are going to be able to handle the program, but just be sure to talk to your local branch and see if this program is right for you. But it's mainly 10th grade enough. Okay, any other questions? All right, well, I think that's it. Thank you so much, everyone, again, for attending. And thank you, Dr. Berger. You did a great job, and we'll see you guys all soon.